In this podcast, we are talking about the impact the virus has had on real estate.
Yeah. Super interesting topic because this virus, I think it's changed the world in a lot of ways from a business perspective and specifically in real estate. So have you noticed any trends? Like I see a bunch out there. Have you noticed any trends that have kind of taken hold because of this?
Yeah, absolutely. So do you want to talk local? Do you want to talk? Well, let's talk about... Well, let's first talk about what has happened to the banks.
Interesting. Yeah.
So let's come from a banking perspective. So what I have noticed is, especially on the larger properties, the banks are here's the thing. Banks are very hesitant to lend on retail, commercial. Mm-hmm. They're very hesitant to lend on office for obvious reasons.
More so because of COVID, you're talking, right?
For sure.
Specifically.
100%. This absolutely relates to COVID.
Yeah.
But what I have noticed too is on the larger properties that I'm going after in the US, there's like virus tax. So what I mean by that is you actually have to put down on Fannie and Freddie style loans. They have instituted something where you have to put down a year's worth of debt service in case like something happens in the market. The bank or the financial institution is covered for at least a year of debt service.
It's like an insurance.
It's an insurance. Yeah, it's like an insurance policy. So that's definitely what I've noticed. I've also noticed a lot of banks are getting tighter. They're very careful who they lend to these days. And they're more selective on the style of property and the properties are lending for as well. So
yeah, definitely.
That's absolutely what I've noticed. Again, mostly going after the larger residential apartment buildings and things like that.
Banks are conservative by nature. That's their business is to limit risk. Mm-hmm. And when there's a big overhang of risk over the entire country or the entire world, they've got to do their best to adjust for that risk. So definitely on the larger scale. On the smaller scale, I'm assuming it's the same thing, right? Like, so as an agent, I'm out there working with different buyers, and some people have gotten laid off or their job has been interrupted, right?
Yeah.
Temporary layoff, then they're back, then they're laid off.
Yeah.
Banks don't like that.
No.
And these people that were out there looking to shop are now suddenly on pause because the banks won't lend to them because of this pause in their income, right? They want to see 2 years of consistent income. Mm-hmm. And blah, blah, blah. So that's been an impact as well. So one thing like that always comes to my mind is what's the opportunity here if that's the case, right? If this COVID virus has limited the buyer pool, whether for small single family homes or large multi, whatever, is this an opportunity if you're if you can get funding, or if you are going after these properties and there's limited buyers, it's technically an opportunity, right? Or potentially.
For sure. I mean, theoretically, there would be, but what's happening in our local market and even Southern Ontario and everywhere right now, you would think that would happen where there would be less buyers because of it. But what are you seeing?
You're right. You'd think like, oh, wow, the buyer pool must be like limited by, I don't know, 30% at least. Yeah. But it's, I don't know if that's the case. Maybe 30% less people are buying right now. I'm not sure. But what I do know is that there are tons of qualified buyers all across southwestern Ontario that are out there shopping right now. And there's way more buyers than there are sellers, even with COVID. So it's a little bit weird.
Now, what I have seen, and I've talked to enough large lenders, they are under the impression that what's happening from a banking perspective, a lot of people, or from their perspective, a lot of people are very hesitant. Actually, I've spoken to quite a bit of like commercial lender or commercial brokers as well. What they are seeing is that people don't really want to sell right now because they're not really sure. Like the future is uncertain. So whenever you have uncertainty, people tend to hold on to their assets a little bit longer. So it's reducing the selling pool, right? It's reducing the inventory on the market. And even in the US and even in Canada, what are you seeing? You're seeing I can't remember the metric. I can't remember the name for it, but there's a metric where how long would it actually Absorption rate. That's what it is. How long would the absorption rate be right now in the US and Canada? It's the shortest it's ever been in history. And that's probably a combination of less sellers and
tons of qualified buyers
that are actually ready to buy. Yeah. And then not only that, I also feel like you have been mentioning, like real estate investing is like ridiculously hot right now. It's got to be one of the hottest topics.
Got to be.
It has to be. So I think it's a mixture of those. I don't think like the virus has created this, increase of demand.
Right. Yeah.
It's reduced supply. Yeah, so not only has it reduced supply because people are hesitant to make any moves, they kind of want to just sit back, let the fog clear a little bit and then start making decisions. But what it's also done is you got to think, like with these lockdowns, for example, right now in Windsor, you can't go below grade and start new construction. Mm-hmm. So what does that do for existing supply?
Well, it impacts future supply.
Supply
that should be coming online right now is now delayed.
Yeah. And then also like existing supply. There's only so many existing, homes on the market, right? That you could even sell or that's even available. So it restricts it heavily, actually. It's simple economics, simple supply and demand.
I think a lot of people they're afraid to move. They're afraid to be out. They don't want to sell their homes because they're literally afraid of dying or whatever the case is, right? Elderly people or whatever. So a lot of people are sitting put. From an anecdotal perspective, the number of listings that I'm seeing right now hit the market daily is about a third of what would normally be hitting the market.
That makes sense then.
But the buyer pool hasn't limited. If you need a house, you need a house. The people are still shopping. Because especially with the rising prices, they're feeling desperate. They say, I better get in now before it's too late. I see that a lot.
Yeah.
Buyers haven't stopped. Sellers have definitely slowed down.
Yeah.
Future supply is limited. Also, future supply is going to be even more expensive now. I think COVID is going to cause big time inflation on the upcoming supply.
For sure. Construction costs have skyrocketed because these lockdowns are putting certain places out of work.
Yeah. And you can only have 4 people framing your house now at a time. So that limits your ability to go quickly.
For sure.
That hurts your profits.
Everything.
You have to raise prices, lumber costs.
Lumber fields are down or whatever you want to call those things. Like those are down. Those certain other things are like in a chokehold kind of situation where, people don't want to work. They'd rather go home on CERB or whatever. So it's restricting material, housing supply, like it's restricting everything. So it's reducing supply when demand is maybe
it's at an all-time high.
You think it's at an all-time high?
I believe so.
Okay, so if it's I was going to say regardless if it's at an all-time high, if it's the same or even a little bit below average, the fact of the matter is supply has been dramatically restricted.
That's a good point, yeah.
So no matter what's coming online or what's available, it's irrelevant because supply has been so restricted. So you have major supply and demand issues.
That's a good point. And I guess like there are a ton of qualified buyers out there. We're seeing it. So what has happened is a lot of these people, there's a shift, right? There's a market shift happening right now. Away from smaller units like condominiums and the GTA and things like that to, larger living spaces where people are now working from home. Now, I think the work from home thing is permanent. I think a large percentage of people are going to be working from home forever. I don't know if you agree.
I agree.
You run multiple businesses. Like, what do you think? Like, not everybody is going to be.
In the stuff that I do, I do find it inefficient to have people at home. It makes things more difficult. And it takes longer to get things done, which obviously is time is money. But I think a lot of companies are going to start thinking, okay, well, I pay X amount in rent, right? And say, for example, if I can pay less in rent,
even if productivity drops 10%.
If productivity drops, it's still worth it because if my expenses are 20% less, but my productivity drops by 10, I still might be there, right? There might be like a 10% there might be a 10% spread there, but and if all things being equal, but I have noticed that when I have employees working at home, it is less efficient for sure. And it's a factor of me also I like to move quick. So it does impede my ability to move quick. But I think that, businesses with like very, very, very high expensive, high price leases and upkeep for their property or their leasehold improvements that they have to put in to their properties. I think that they're going to really, significantly look at that. I don't know how this will affect employees. I've seen a lot of studies coming out where employees are not liking the work at home scenarios. They feel less productive. They actually feel like they're putting in more hours because when they're at home, they're being distracted. They can't get enough done. So they have to like extend the workday out. Yeah. I've seen a few studies that way. But I do think it will change. I think once you start giving people, whether they deserve it or not deserve it, autonomy like that, I think it's going to be difficult for them to go back.
I think so as well. Yeah.
Because I think what a lot of people would rather have is I think they would rather work at home, but what they don't realize is those two things is they're going to be less efficient. What's going to happen is their bosses will probably end up wanting to pay them less because, now they're not driving into work. They're not having these extra expenses. So they're going to expect less. So they're going to earn less. And then number 3, I think that you will see, because of the unproductive ability that some people have where they might have kids at home or whatever, that doesn't allow them to be as productive and shut their mind off or like really zone in at home. They have to extend the day. So it's going to feel like they're putting in more hours and they're eventually maybe going to want to come back in person to work.
Yeah. Super interesting topic. Like I guess we don't know exactly what percentage is going to change. We just know that it's changing
to some point,
to a point enough to affect real estate.
For sure.
It's happening. Yeah. I'm seeing it.
Yeah. Especially, negatively affect retail. This virus has accelerated the online world by like years,
Seriously,
like decades, even probably. maybe even like a decade.
Yeah. It was happening, but it's
clearly accelerated. Yeah, for sure. Yeah. And then office space, I that's the last thing I'd want to own right now. I'll tell you that.
Yeah, definitely.
And then obviously with residential, the like restrictions on supply and like increased demand. It's
single family homes now, right? People moving out of the condo, needing more square footage. They want a home. They want a yard. Mm-hmm. That's their workplace now. Mm-hmm. Think about that. Mm-hmm. You're at home now 8 hours a day. You're not at the office anymore. That's what's driven Windsor's market with Rocket Fuel as well, and basically all the other markets as well. Now the question is, let's talk about this, right? Let's talk about the GTA. Would you, right now there's a big influx of rental properties, condominiums, specifically downtown Toronto. And what's happened basically is there's no more Airbnbs. Mm-hmm. Those are all being rented now. So you have a bunch of rental properties, rent rates are dropping, blah, blah, blah. Is that a short-term trend? What are your thoughts on investing in the GTA period, whether or not it's a condo or other type of investing? And is this a long-term thing or kind of a temporary blip? What's your opinion there?
Thanks for tuning in to the Pull the Trigger podcast. Follow me on social media platforms at Lambo Lapdog. You can listen to this podcast on all major platforms. This podcast was brought to you by Canadian Protein, Canada's favorite protein and supplements. And Coachwood Capital, passive real estate investing made simple. What do I think about the GTA?
Would you invest, would residential real estate, would you be buying in the GTA or looking? I don't think you were anyways.
No, I wasn't. I've never been interested in the GTA. I still like property to cash flow. It just doesn't happen there. If I came across a deal in the GTA, would I buy something? Yes.
Would that be residential, you think?
Yeah.
What if it didn't cash flow? What if it was
I'm still not a player for real estate that doesn't cash flow. I'm still not. So for me, I don't like those areas.
So do you think that what's happening right now with the excess condos, because the residential real estate is as hot as ever, like single family homes rocketing every day. It just seems to be the condominium market across the GTA that's being hit, specifically downtown. Is this a temporary glitch, or is this like a long-term trend where just people aren't living in condos anymore?
Well, I think it's also a factor of like pre-construction. People just went fucking balls deep in pre-construction. Yeah. So I think that's a major factor. I think when you have a city that has that many draws, I do think it will come back. I don't think there's like this. I don't think there's still gonna be this glut of condos in the market in the GTA that are just gonna like sit there forever. You know, I really don't. I think people got a little bit too, overzealous, and they built and built and built and built and built, and it was working for the last 20 years. So why wouldn't it work for this 1 year? But we might just see a dip in the cycle, and that's it. Yeah, I don't think it's like, maybe just forces prices down a bit. That's it. And then what I think is going to happen is, say for example, say prices get to a certain point in the GTA for single family homes, and then people are like, well, that's too high. I'm just gonna go buy this condo instead.
Or not, I don't have a choice.
Yeah. So I don't think it's like, I don't think it'll end. I don't think that, I don't think like you were mentioning, there's reports of like the Toronto market is dead, like real estate is dead. Is that what you were saying?
I think Jesse had mentioned.
What did you say, Jesse? What did you say? It was a YouTube ad. What was it for? For what? Somebody on Amazon?
Yeah, it was some bullshit.
Okay, never mind. I thought you were talking about. Yeah, okay. I thought he was talking about Toronto real estate. That's what I think he was talking about. So no, I don't think that like real estate or the condo market for that matter in Toronto is dead. I think it'll come back for sure. There's always going to be a point. Like, you got to think, like, if you have a house for $1 million, but you can get a condo for $5 million, like,
and you can only afford $5 million.
Yeah, like there's an affordability index here happening. Like, you can't just like go buy what you can't afford, right? Yeah. And then people are always, well, they're going to weigh their options. So there's always going to play. There's always going to be a place.
Yeah, people will adapt to the market. They don't have a choice.
Yeah, and I do think people will end up going back to work to some extent. Maybe it won't be 100%, but maybe, even if it's 60% of people that want to go back to work, you got to think like people want to work these days, right? People want to earn, right? You can only be so effective if you have, the majority of people have kids, they have families at home, this and that. They can only be so productive when that's all around.
Let me ask you this. Do you, like, if you're working for some big corporation, like some big bank or something, do you really care about your productivity that much, other than what they tell you that you need to do?
No, I agree with you. I'm not saying that. I think that the motivated individuals probably, to some extent, I can't see. You need a cohesive work environment to be very productive and to be efficient, and I don't think that comes with being at home. To some extent.
I agree. There's probably certain positions within a job or a big corporation that you just don't need them to be at the office.
No, and that's what I mean. Yeah, like you need. I feel like you need
the
like
core.
You need a collaborative,
to be there,
a collaborative environment to really do things big. Like with us, like a lot of times we get together and like, I wouldn't have the same ideas that I have unless we were all discussing them. It's a collaborative, and I don't think like being on a Zoom call would have like this. It does just
while you're distracted at home with your kids.
It's very important. It's very important. Like, humans are very reliant on in-person communication. You don't get the same thing on a fucking Zoom call.
Yeah.
You just don't. It doesn't happen. Like, we still need human interaction. You really do. I don't know what I would do if I didn't see people for a year. Like, maybe I would go crazy.
Well,
I don't know.
Solitary confinement is one of the worst punishments.
Exactly. I think it still is important, and I think for a very creative environment and an environment that needs to push forward and force creativity and change, I think you need an in-person work environment.
So let's theorize this then. Let's say 10 to 15% of the market for jobs is permanently affected, stay at home. The rest will probably go back to that core structure environment because that's what you need to run a successful business. But 10 or 15% is a pretty significant impact when there's already a limited supply of housing. You add 10 or 15% more people to that mix, and you're potentially, years before you can catch up to the supply. So, but interesting topic nonetheless. And then one thing I think people don't think about as well, like for all these people that are, people keep talking like, oh, they built too much supply or they're building too much in Windsor right now. But you got to think like all these immigrants that are coming in, they're going to have families as well. And they're going to have kids, and those kids are going to need homes. And all the people that are the millennials, our generation or the generation behind us, they're all starting to enter the market right now and they're having kids. And so you have to build in anticipation of the future. Like you have to.
But are they building too much right now in Windsor?
No,
I don't think so.
But I think people
are saying that.
People think that because they don't think about the actual demographics of what's happening, and not just immigration, but those immigrations and their kids and the future generations and the generations after that. Like housing will never die unless Canada's population just completely starts going stagnant, which the government will never let happen. They always want a positive population growth.
Yeah.
Then real estate's going to keep increasing in value because all the new supply is necessarily more expensive, right? So just think a little bit more deeply. And when you project real estate over 25 years, it's like you can't lose.
No.
Maybe in 1 or 2 given years, but not over 25.
No.
Unless some crazy stuff happens,
No. Like, I don't even know what the mark. Maybe Jesse can pull up a stat where the Toronto condo market is right now, but it's not even going to.
It's going to be a blip.
It'll be a blip in the radar, for sure.
Yeah. Because like you said, when people start getting priced out of single family homes, because now everybody's going to single family homes, prices are rising so quickly.
Yeah. And what'll happen is it'll just get absorbed and then they'll start building again. So it's not like it'll just, people aren't going to keep building. If there's like a glut of condos on the market, they're just not going to keep building.
That's a good point.
They're just going to
stop.
The
market will adapt.
Yeah, the market will adapt.
Catch up.
Yeah.
And then it'll resume.
Exactly. And then it'll just pick up where it left off, and that's it. Pretty much. Like big deal. So
we got to remember, it's the perfect storm in the GTA. Every business is shut down. You don't have the downtown amenities anymore. People are working from home. All those Airbnb short-term rentals are now long-term rentals.
Yeah.
It's the perfect storm. You had pre-construction condo investors now getting hammered. They're probably panicking and selling. So is it a time to buy? Not for me, because I think there's better opportunities, but theoretically it might be.
Yeah, I would if there was opportunities that made sense.
Cash flowing condo or something in the GTA, I would be interested. I just don't think even now you can still get one that cash flows. I don't know. I've asked around a bit.
Yeah, and what have you come up with?
It still doesn't cash flow.
Yeah, so there you go. Right. So, all right, what do we got here? What do we got? Does this create a window of opportunity for investors?
Well, let's talk about the U.S. Let's talk about what you're seeing in the large multi for U.S., right? And how hard it was for you to get financing because of COVID, and
for sure,
how many other investors are probably struggling a bit.
Yeah. So when I bought my first property in the U.S., that apartment building, it was very difficult to get the financing.
Specifically because of COVID. Like COVID made it even more difficult probably than normal. They wanted to see more stuff.
For sure. So like I mentioned, they put that virus tax on it. They wanted you to put 1 year of debt service down where they hold it in trust.
That's a pretty significant chunk of money. Like how much would we be talking there in a say on a $5 million purchase? How much?
Like 150,000.
So that's going to impact all your numbers. It's going to impact your cash on cash return,
for sure,
opportunity cost. It's going to limit. Some people are going to say, "Well, it's not worth it."
I didn't end up having to do it, but so
a lot of people would.
Yeah, because they want agency financing with a lower rate. So I ended up going bank financing with a little bit of a higher rate without having to do that. And then I negotiated my way down from having to put like deposits down and hard money, basically insurance policies down that, if shit hits the fan, the bank is covered. So I ended up negotiating my way down so I didn't have to do that. I paid a little bit more on the rate, not from not having to do that, just from not going with agency money. So Freddie Mac or Fannie Mae, the rates are typically lower. Freddie Mac, usually you can get a higher LTV. Fannie Mae, you can get a lower. They don't usually go as high as Freddie Mac, but instead of that, I wanted the higher LTV without having to put down so much on say a financing insurance policy.
Yeah, for
so
a year.
a year, whatever.
US is
exactly. So I ended up using bank financing, which just in general, bank financing is it comes at a higher rate in the US. So it's almost like CMHC, like whatever that kind of stuff. So, but they were very strict. They were very, very, very strict, and they qualified me based off of my other businesses as well.
So it wasn't doing better in COVID.
Exactly.
So you're kind of in a sweet spot.
Yeah.
Now, what my theory is that there's a certain percentage of potential buyers for large multifamily in the US that are on the sidelines now because their businesses have suffered because of COVID, and the banks aren't going to touch them like they would, and they're on. So maybe there's 10% less people in the market or something. Who knows? I'm just making up numbers, but like maybe this is the buying opportunity. Maybe it would be even more competitive if it wasn't for COVID.
Yeah.
Interesting theory. I don't know.
It is for sure. So another thing that I've noticed is in the areas that I'm looking at now, there seems to be a lot of interest because the areas that I'm looking now are not shut down in the US, and there are still people making money in areas that are shut down or locked down or whatever, where they're like, well, I want to invest too, but they're hesitant to go into areas with high vacancy and in metro areas where they're used to investing. So they're going into different markets where things aren't shut down, where there's like massive migration into these states like Texas and Florida, so
so a big real estate investor from New York says, "Hey, everything's shut down downtown New York.
We don't want to absorb these high tax rates. We're not okay with the higher taxes. So where are they going to go? They're going to Florida. They're
going to buy large multi.
Yeah, in the Northeast, like the Northeast, they're coming down to Florida in droves. I'm hearing.
And people need to understand when big time investors and smart money people have money lying around, one of the first assets they look to put that money into is real estate. Yeah. Every time you're going to go buy a large multi that makes sense.
Yeah.
So you're seeing that trend and
very much. Yeah. Very much. So I'm seeing maybe there's a little bit of hesitation because nobody really knows what's going to like kind of pan out from this this virus and this pandemic and everything. But it's all relative to me, right? So say, for example, like we were talking the other day, if down there or at these properties I'm looking at, say, for example, if I can get something at a 6 cap, but say the market there, on average, somebody from the local area knows and won't overpay for something that instant where that market's like a 6.5.
Yeah.
I'll gladly pay 6 to get into the market. Because here, I can't get into anything without over a 3.
Yeah, it's all relative.
It's all relative. So for me, looking at other markets outside of mine, it's easy. Like deals. Yeah, they all look like deals. So I'm actually okay with it. So for me, I'm actually coming from a different mindset where, the virus factor is at play, whether or not people are kind of, I'm sure listen, if the economy at the end of the day were to continue on the trajectory that it was in like the end of 2019 going into 2020 and this virus didn't hit, it would be so fucking difficult to get anything. I would imagine.
The economy was roaring.
It was absolutely booming.
Yeah.
So, the US had the strongest economy in history. We had the strongest economy in history.
Tons of wealth
being created. So from my perspective, we didn't see a downturn in the economy since usually it's every 10 years. We were on a trajectory of hitting almost 15.
Yeah, 13,
so wealth was being, multiplied exponentially over more years.
Yeah.
So if this wouldn't have happened, I might not have been able to do what I've done in the US already. It might be a factor of the virus has allowed me to, work my way into the US and get property at discounts.
Even if it's a slight discount.
It's
better than a 10% increase or something that might have happened.
Nonetheless, I'm still a player in these markets because our market, I don't see the same returns that I'm used to. And me, being as seasoned as I am now at this point, I'm comfortable going outside of my backyard and very far out of my backyard at this point. And I'm willing to take that risk because I've learned enough about real estate to know and become comfortable, understanding numbers and understanding the reality of real estate and what kind of metrics I look for and what kind of boxes I need to check on property to become comfortable whether or not it's in my own backyard. So for me, this is what this, virus and pandemic has, I guess, offered me because it's not scaring me out of the market.
Yeah. And it changed our market here in Windsor where you were investing so quickly that it's like hard to get returns now even here. All across Ontario, it's super hard. So what do? You're going to start looking for other opportunities. Yeah. And then you stumble upon the US. Now, I think my personal theory is that a lot of other investors are going to start looking at US large multifamily from around the world because this is happening in a lot of countries where prices of real estate are just exploding to the point where you can't get any returns. And when I look at the US returns relative to what we're used to, just when you pull up CoStar, it's like, holy shit, these are all like relative to what we're used to. They're good deals. Now, like you said, some US people will be like, well, this is only a 6.5 cap. I'm used to a 7.5.
Yeah.
But to us,
and I think it might also be a factor of, how have you seen people in the local market here where they're like, I'm going to wait. I'm going to keep on waiting. I'm going to keep on waiting. Great point. It might actually be the same factor in the US where, I'm going to wait. And then it offers opportunity to people that recognize the fact that like, hey, like here's the thing too, like because I'm in it for the long haul and like a lot of what I've noticed too, a lot of Americans don't like to hold things that long. It's more common to exit out of a property even before the term's up rather than hold it long term.
1031 exchange.
They like to turn and burn property over there. Yeah. So more so than we do is what I've noticed. Maybe from, if you're taking our hyper location versus like, the say 100 properties that I've qualified over there, based off the 100 properties that I've seen, a solid 75% of those property had like assumable loans on them, right? That's a big percentage,
which
right?
means they haven't held the property for very long.
No, not at all. Usually it's like 2 years into the term and they're like, no, we want to move on. Yeah. And that's also testament of how fast the real estate market's moving over there in good locations. They see an opportunity where the property has appreciated faster than expected. So they offload it and they want to cash out.
1031 exchange and probably go do something else.
Exactly. They go buy so for me, when somebody is looking at a property and that's local and thinks, well, this isn't a really good deal. Like I mentioned, it's all relative to me. It's a great deal. And I don't care. Like I would, for a great location, I don't mind overpaying. Because I know long term what's going to happen.
If your long term analysis is right, then these are really good deals, even though they're not used to it. And we've seen that in Windsor. People weren't buying in Windsor because it wasn't an 8 cap anymore, or it wasn't a 10% cash on cash return. And then somebody like myself was like, no, like relative to Ontario, this is a really good deal. And a lot of other people saw that too. And then those cap rates and returns started coming down and down and down. And I think the same thing is going to happen across the US.
Yeah.
But
for good locations, mostly good locations.
Of course.
I don't think
location. Yeah. But the people that are probably local to the US, they probably will be unwilling to adapt to lower returns.
For sure. So how will the market play out with regards to the virus long term?
Oh, that's a good question. We talking like Windsor, Ontario, we talking Canada?
Anything. So let's talk Windsor first. So what do you think will happen in Windsor long term? Because like what will be the fallout for the real estate market in Windsor because of all this?
I think the demand for single family homes is just going to be consistently constrained for the next forever, basically. I don't know about maybe there's a couple periods.
For the foreseeable future.
For the next 50 years. The fundamentals tell me that you're not going to catch up to supply because the government is screwing up. Their policies are making it impossible to catch up. Too many immigrants, too much red tape. So basically, you just want to own real estate. Like I wouldn't be selling anything right now as an investor in southwestern Ontario. Now, how do you adapt to that when there's going to be super low returns, right? You're basically going to start banking on appreciation and principal pay down, which is still better than most investments. And if the fundamentals are right, you're going to get really good appreciation here. As investors, like we don't typically like to do that, right? Mm-hmm. So I think a lot of people will start looking to other markets, whether the prairies or Newfoundland, I don't know, some other markets, Canada, which I don't like either, because I want to get all three. I want to get cash flow, I want to get principal pay down, and I want to get a nice location that's about to appreciate because of the fundamentals and people moving there and immigration and all these other things. That's when you get like monster gains really quickly. And I think it's doable. Yeah. So I think people will just start shopping around. But what are your thoughts? Like, how do you plan to adapt other than going to the US?
I go to different markets. I look at different real estate. So before going to the US, I started, getting an industrial property.
That's a good adapt.
I wasn't getting the returns that I wanted on residential. So I started buying, industrial, and I was getting crazy returns. And I kind of knew it was going to happen. I knew that, office was out, retail was out. People didn't like that. So what's the other kind of property that you can get that's like gonna pop after real estate? Yeah, warehouse. Because at the end of the day, no matter what shuts down, people still need to make stuff. And in order to make stuff, you need a place to make stuff. And you only make stuff in industrial property. So manufacturing was never shut down. So that to me was the next shoe-in for creating, returns that I wanted in real estate, because those industries that made stuff weren't getting shut down because the world still needs stuff.
Yeah. And that's the thing. We're always going to be investing. Like I'm always going to be investing in real estate. It's just a matter of where and which strategy. Yeah. Like I'm not going to go put my money in a different asset class. Like Bitcoin or something like that. Like it's just too risky. You're going to be still buying real estate just. Yeah.
Like for me, oh my God, I get asked so many times about Bitcoin and in the stock market and stuff like that. And it feels like I'm gambling. Every time I look at that, I'm just like, and again, it might be a factor of I don't know enough about, people are like, well, you do the same thing with real estate. You pick the best companies and you base them off these metrics and stuff like that. But there's a very deep level of being out of control there. Like you're just out of control with regards to the stock market. Yeah. And you can't control the people that are making the calls. I can control the calls being made on the property that I manage. It's just a fact.
Yeah, that's 100%. And leverage. Like you don't have any leverage in stocks.
Exactly.
Like I have 5-to-1 leverage with real estate. That's why you can't get rich very easily in stocks. No. I love stocks still. A lot of people do. I'll bet on Elon Musk because I don't care. He's better at managing the company than me anyways. So I'll give Elon my money. But I agree. Like good luck getting financially free in stocks with no leverage. I just don't know if you can. Most people anyways.
I would rather own.
Yeah. Look at the fundamentals of real estate. They're insane.
Yeah. It really is. So for me, it's a no-brainer. Let's look at what else we got here. Obviously, Jesse, you cut these out, right? We pretty much touched on everything, man. So what can investors do in order to, I guess, leverage this type of environment right now?
Think outside the box. Like, look at the trends. Like you said, you started buying industrial real estate 5 years ago because you saw the trend. And then I don't think people are willing to bet on themselves enough, right? Like, and give themselves enough time to let their thesis play out. So if your thesis is, hey, Southwestern Ontario doesn't have enough houses, just go buy and sit, right? Whether it's $100 cash flow, $200 or whatever, just buy it and sit, right? If that's all you can do right now, when that dries up, start finding the next place immigrants are going, right? Invest with us in the US, like whatever the case is, right? Like just adapt, but always be putting your money in real estate. The fundamentals have not changed.
No.
For real estate. But what about yourself? Like, what do you?
I mean, it's tough because I don't know how to tell people to change their investing habits based off of what's happening in the market. And what I mean by that is I always preach your property has to make money. And one of the reasons why I've always preached that is because property has always made money in Windsor and in the surrounding area where I've always been doing this. But I can see what's happening here, and I can see how eventually it won't make money. So for me to sit here and tell people, you only buy cash flow, and eventually the market doesn't cash flow, then what do I tell them? And I know what to tell them. I shouldn't say what do I tell them. I know what to tell them, but my answer will be go outside of your market then. But that could be a very daunting thing for people. Like very, very daunting, because nonetheless, the fundamentals still reign true is that for me, I'm a big believer, and I'll refute this with anybody, that any business needs to make money, and any business that doesn't make money is a dying business. And that's true across the board with real estate. I don't care if you're in it for appreciation. And the reason why I say this is because how many people do you have that want cash flow because they want to live off their real estate?
Pretty much everybody.
So
myself included.
Exactly. Okay. So say for example, if you take these principles and you stay in your market and eventually your market's not making cash flow, well then, like, what do you do? And for me, real estate investing is, I don't even like the word like real estate investing. You know, I it's a business for me. If that business isn't making money and you have to live off of it, what's the alternative?
Adapt.
You have to adapt, right? Or you have to turn and burn your real estate. So there's no long-term gain anymore. There's no long-term, wealth creation, and there's no long-term, strategy, right? So for me, the only option is to tell people you have to get outside of your market and you have to become comfortable with it however you feel fit. I don't know, but that's so difficult because that took me a long time to get comfortable with. So I don't know. Well, that's probably one of the reasons why I ended up setting up Coachwood, to be quite honest.
Well, you got to think too, if you were going and buying single families and duplexes across the state, it wouldn't make sense.
No.
Like you can't.
No.
There's no scale. How are you going to manage those, right?
Exactly.
But if you have the opportunity to buy like 55 unit apartment buildings, then it's like, okay, I don't need to be there.
For sure.
You have a management team that lives on site.
Yeah.
You have a leasing agent.
And this is what I mean, right? Like, how do I tell people to get outside of their market when they're going to have a hard time finding a good manager for a couple properties? Because I already know what's going to happen. They're not going to be good. Like the reason why I have a goal of going over to the US where I will not buy anything under 50 units a door is because I know good management will want to manage a building of that scale because they make money. Professional management companies, because they make money managing that scale of a business.
And then all you have to do is manage the manager.
Exactly.
And so they manage the 55 units. So
that's hard for me to, tell people to do. I mean, because like I said, I can see the writing on the wall in this town. I can see it. I can see how, because like, where's it going to go? So say it starts hitting 700. What kind of rent do you need to serve a $700,000 value? You know what I mean? And maybe it'll get there, but wages won't they won't catch up. It's not like, what are we going to see? We're going to see like $25 minimum wage. Like, what are we going to do?
No, it's
the businesses won't be able to sustain themselves at that point, right?
Yeah.
So
I think we're a ways away from that.
I agree
in Windsor. Yeah, and I'm always.
But here's the thing: like, are we though? Like, this? Are you saying the $700 mark?
No. Well, the average price is approaching $700K right in the next couple of years. But that's not the property I'm buying. I'm buying the $300K duplex or $350, and then I'm renovating it.
Fair enough. Yeah.
Like, there's still cash flow opportunities for the next several years in Windsor, in my opinion. Whether you have to do a little bit of work to create it or not, that's different. But it will get tighter and tighter. Now, I'm always going to be buying Southwestern Ontario. I love the fundamentals of Southwestern Ontario real estate. I'll even break even. Like, I want a diverse portfolio. I want to own real estate in a lot of different places. Just like with stocks, I have different stocks for different reasons. Some are for like massive appreciation, like an Amazon or something like that. Some are for nice, steady, safe banks. They're not going to go out of business. Southwestern Ontario is like the bank. Like you just buy that, sit on it, hold it for 100 years. You're golden. Socialist policies here, not enough supply. Just sit, let it pay off your mortgage. You're going to make a shitload of money. My other portion of my portfolio will be like, I'm buying this for cash flow. I'll buy like, I'd love to invest in the States more. I'd love to invest wherever the returns are, I'll invest. But I'm not going to knock Southwestern Ontario real estate either. But if you're looking for cash flow as part of your portfolio, you're going to have to diversify.
Yeah.
I wouldn't say sell your Southwestern Ontario real estate and go buy in Prince Edward Island or something, or Manitoba.
No.
Like, I don't want to invest in those farm towns because I don't think they're ever going to be big time cities, right?
No. Again, though, from our perspective, we see a lot of people that want to quit their day job and just become real estate investors, right?
Yeah, and that's cash flow.
And that's cash flow. You can't. I mean, it could be like a turn and burn kind of like short-term flip stuff, but it's mostly cash flow.
You can't live off flips because you have to keep doing them.
Exactly. Yeah. Like
that's your job.
So it's hard for me like when I say like, you know, or when I try to give people advice,
buy stuff that doesn't cash flow.
Yeah. I don't know. I can't do it. And then if you're in an area that doesn't cash flow and I tell people you have to go to an area that does cash flow, that's a daunting notion there. It's because you're getting outside of your comfort zone. But hey, like at the end of the day, this is business. It is uncomfortable. So get fucking used to it. Like there's no option. There's no other option there. You have to get comfortable with being uncomfortable. Yeah. So if that means getting outside of your comfort zone, then and going outside of your own backyard, then you have to do it.
Plenty of people have done it and are doing it. It's not impossible.
So
probably not that hard. Actually.
So in order to benefit from what's going on here, I feel the best way to benefit from like the whole virus scenario and what's going on right now, even in politics and everything, it's more of a buy and hold long-term play rather than, you know, these quick flips and wholesaling and all that stuff. That's quick money. You're not gonna build real wealth.
Long-term generational wealth flipping. You'd have to pass your flipping business down to your kids.
No,
You'd have to go flip.
Yeah, exactly. So, and there's only so many you can do. That's the problem too. This is why I like the whole, this is why I like the scalability of buy and hold long-term good location property, because that's how you scale. And that's how you not only scale your portfolio, but like literally scale wealth, like big time,
wealth.
Massive. Yeah. Cash flow won't do it. Flips won't do it.
Yeah.
You know,
and the beautiful thing about like large apartments is like if you raise 55 units, $25 each, like how much is that a month of cash flow?
It's
55
big.
times 25. I don't know the math on that.
But somebody do the math over there. Can't even do it.
Well, 50 times 20.
1,375. Now do that times 12. 16,500.
So divide that by 0.06.
$275,000 you created. I would
$25 a month.
Yeah. And now do this instead of dividing that, but do 16,500 divided by 0.05. That's even more realistic these days for sure. $330,000 you increase the value of that. That's so, every year.
Yeah.
Like increasing by $25 is fuck all. That's like what, 2-3%?
Like the rate of inflation.
Yeah.
Like you're, you know.
So you're increasing the value of the property significantly.
Now, if you owned 55 single family homes, you could do the same thing. Problem is, you got to manage 55 single family homes.
And the management, and the management and maintenance costs of that is like astronomical.
No scale.
Yeah, there's no scalability. You're spending the same amount of time on that one house as I would be spending on. You know, I spent the same amount of time on my building. And on these buildings that I'm buying, like the large scale property, as I did on like one house. Like it's there's no, it really is. Like when you actually think about it, it's the same amount of time, the same amount of, if anything, it's actually quicker. Like, I don't even really, like, I'm not walking through with the appraiser. I'm not walking through with the property inspection guy. And the property inspector, like over there, like they're so in depth, 100-page report. I know I have a timeline of how long everything will take to degrade. I know X amount of dollars at year 5 will have to go into this building. And X amount of dollars at year 10 and X amount of dollars at year 12.
Yeah, it's like you need to replace the roof in 8 years. You need to save X amount of money for the next 8 years to pay for that roof. You need to replace the mechanical system. Like they amortize everything for sure. And give you a schedule.
It's very intuitive.
It's actually easier to manage.
It really is. It actually is.
Yeah.
Which, surprisingly,
it's hard to like imagine that.
And the reason why is because you have professional management teams
that've been doing it for decades.
Yes, and they're very efficient at it. They have they have everything already lined up. Nobody, like, I feel like I'm like literally the only one that is capable of doing that, even in the area that has management that can actually service single family homes the way that a professional property management team.
You have 100.
Because I have
properties. You have
so
scale,
many. Yeah, because I have scale. So I know how to already do it, and I already have a team that does it.
And the only way that team's going to stick with you is because you keep them busy enough.
Exactly.
If you have 3 properties, nobody cares about you.
Nobody cares, man. You're going to get a weekend warrior that doesn't even cut your fucking grass. Like, I've already run into it. Like, I've already been there. Like, this is a problem. Like, people are going to be like, oh, no, it's not. I've got a great, okay, fine. Like, you're an outlier then. But I've already been down these roads, man. Like, don't fucking tell me. Like, I've already been down this road. I already know what happens to shit property, like shit locations. Like, don't fucking tell me. Yeah. You know what I mean? Like, whatever. I'm open to suggestions and I'm open to everything, but like, it's hard to replace experience. So whatever.
So like we hit a massive boom in Ontario, Southwestern Ontario. Imagine if you just like 5 years ago, instead of buying all these single family homes, you just bought one 55 unit apartment building at a 6.5 cap 5 years ago. And then as the market's like taking off, and then like you could do 3 of those buildings.
Now here's the thing. Yeah, I agree with you. But here's the thing. Single family home will always increase faster and more on a percentage basis than like larger scale multifamily. It's just a factor of there's more people in the buying pool for those type of investments than there are on a fucking 55, 56 unit building, right?
Absolutely.
However, you don't have economies of scale. It is tough to scale. Like, what am I getting? I literally have tried to buy as fast as possible. Again, in the Southwestern Ontario market, you can't buy large scale real estate. It's tough. You can, but it's tough. Money. Yeah, exactly. It's tough. I've tried for the longest time, and I don't want to buy just shit. You see a lot of these buildings just come up on the market. They're just fucking horse shit.
You mean nightmares?
Yeah. So I'm not talking about like the nightmare building. I'm talking about decent quality property, right? B grade property. Like usually when we see a property come up literally on the market in Windsor and it's multifamily, it's literally like a D property. Like literally, if that. Might even be an F.
In a D location.
yeah, but like a fucking D property in an F location. I don't even know. It's the worst. So because the good property doesn't trade on the market, right? So the problem is
as fast as you bought, you were only able to get 100 and something units.
I could only get X amount of years. I could only get X amount of units in X amount of years, whereas literally people over in say the US or whatever have been able to scale in the same amount of time that much faster because they have the opportunity to get that many more doors
in one shot,
not paying, exchanging the property, turning it over
tax free.
There's so many more opportunities when you start looking outside of your own backyard. And that's what I have to do now. That's what we have to do. You have to do it. You can't. It's almost like if you, and this is why I think it's so important to treat real estate like an actual business. This is exactly like looking at emerging markets to offer product and services. There's, say for example, like with me, my nutritional products, there's going to come a time where like the absorption of my brand in Canada will be maxed out potentially, right? Where I'm trying to literally siphon off business off of like different brands or different people, whatever, that I've tried to already market to, and I have to throw extra money at them to really convince them to start buying my product. When I could just go to a different market, like, India, with like, I don't even know, 100 times the population of Canada, and they just love our product. It's about, okay, how do I develop the logistics on how to get there?
It's a great analogy.
It's not, it's no different. It really isn't. It's the same thing. So how do I develop the logistics of handling the management of a property that's outside of my backyard? It's really actually not that difficult. It really isn't.
You just got to do it.
You just have to do it. You have to do it right. Yeah, you just have to do it right. You have to get to the point where, you know, I'm sure it is possible to do the single family home stuff over in, you know, the US or out of your backyard. I'm sure it is, but it's going to be difficult. It's inefficient. It really is. It's really inefficient. It's really difficult to scale. When you start playing with bigger numbers, you scale faster. It's just a factor.
You bet small, you win small.
Exactly. 100%. So yeah, when you play small, you win small.
Yeah, and it's slow.
I'm just tired of playing small. I really am. I'm tired of playing small. I feel like I'm smart enough to raise capital and go into these markets and vet them just like I have with different real estate in the market here. I bought in real estate in different pockets that people are like, no, I would never touch that real estate there. Don't fucking buy that. And all of a sudden, boom, what happens? The value skyrocket.
Yeah.
Because you could see what's coming. Like I'm able to see, you know, we do a good job of figuring out like, okay, well, this market's there's going to be some gentrification in this market or this area here, and it's going to force these people out. They're going to have to move here, and it's easy to see.
Anybody can see that, by the way. It's just nobody trusts themselves, and nobody's willing to like take that risk and to trust what they're seeing happen. But it's experience as well. Like you develop that skill. I definitely know you have that skill.
You have to.
You were ahead of the curve on a lot of these trends. For sure. Have you ever thought about, other than the US, which obviously you've already made the inroads there, have you thought about any other ideas like Caribbean stuff and these other destinations?
No, I've never, no. The only other destination that I've thought about was Azores, where my mom's from.
Cool.
It's not that expensive. It's probably getting expensive there, but it wasn't, last time I checked, it wasn't that expensive. And like you're literally like in the middle of the Atlantic Ocean. Yeah, it's amazing.
And I can see as the world goes more global and the wealth just keeps growing across the globe and more wealthy people are going to want to live on these like islands and beachfront.
I can get my European citizenship. So it's not, I think that's a big advantage there too. But I've been there like 3 times. It's amazing there.
Yeah.
Like it really is. Like I actually like really like that. And that's another thing too. Like I want to invest in places that
you want to go and visit.
That I want to go to.
Yeah.
Like I don't want to go to like these shit locations anymore. Like I don't want to go there. It's not about, I want to go where people want to be, and I want to invest my money there.
I bet you a lot of other people want to go there.
Yes, exactly. And that's the mentality, right? I want to put my money in places where people want to be. It's simple.
Yeah. And
right?
you know people want to be there because you want to be there.
Exactly.
And we all think alike. And it's just like for a stock, there's an old thing like buy what you know, buy what you like. If you like that company, you're already ahead of the game.
For sure.
If you like that location, and why wouldn't you, right? Florida, for instance.
Yeah.
You're on the Atlantic and the Pacific Ocean.
Yeah.
Like on a peninsula in the Sun Belt.
Yeah.
Like you don't like it's not rocket science. People want to be there from around the world.
Yeah.
Now, I don't want to be in Chatham, really, or
No.
like Prince Edward Island. It's just not my style.
Yeah.
Right? It's not the weather I want. It's not the ocean front. In the warm weather and beachfront and all that stuff, right? But you can spot these places out probably pretty easily.
For sure.
And then just dive into that market and
absolutely,
and
man. Absolutely.
Spots.
I think we're pretty good, no? So let's summarize what has actually happened because of this bullshit virus here. So we should cut that out. Are people not going to like that I say bullshit virus?
It's a little bit
controversial. Controversial. So let's summarize what's going on here. Because of this virus, it has literally squeezed supply based off of shutdowns, people being out of work,
rising prices
based off of, these issues here. It seems like the political landscape is flooding North America with immigrants, which is obviously doing what? Increasing demand. Significantly. So all of these factors start propping up the real estate market like heavily. So all in all, the only way really that investors can benefit from all this is like literally understand these fundamentals that we're telling them and make decisions based off that. Because for me, real estate is much easier to understand based off simple fundamentals than any other type of investment, no matter what. Like it's actually like real estate is actually the easiest business for me to understand and be in by far. There's no other business that I can even literally think on that would be easier, like an easier sell or an easier play than real estate. It's literally the easiest thing. And
it's borderline. It's probably the lowest risk. It's insane.
Like literally the only other business that I can think of that would be better is like making water. Like I'm not even joking. Like if you actually had to make water, like I don't know because and then the reason why is like or like, you know, obviously food, but then there's like, you know, there's competition, there's this and that. So real estate, it's even easier because, you know, it's probably actually easier to develop real estate than obviously develop like food brands and like all this other shit.
Oh, I see what you mean. Because it's a fundamental
necessity. It's a fundamental necessity like water. That's what I'm getting at, right? It's a fundamental necessity like food, water, shelter is a fundamental necessity of life.
But you don't have to keep making real estate. Once you own it, you own it.
Exactly.
And you own the land.
Exactly. Yeah. And there's only a certain amount of land, right? Yeah. There's not a finite number of, you know, food brands or whatever, you know what I mean? So,
it's a finite resource.
It's a finite resource, you know, like water, essentially, right? Mm-hmm. So,
yeah, let's wrap it up. The world's changed. Adapt.
It has. It really has. It really has. And
ideally cash flowing real estate.
Man, I wonder, for me, it seems like, literally, yeah. I mean, this virus has literally accelerated the real estate market astronomically, like overnight in 1 year. What was it? What was the average home price in Windsor a year ago from today?
$350.
Was it?
$350-ish, yeah.
And what is it today?
It's over $510 and rising every week. And I'm not joking; it's rising every week.
So there you have it.
Yeah.
So if you bought a house last year for $350, you know, which I did multiple, I made $200,000
in a year. Usually that takes a decade.
Yeah. Yeah. So that right there is how this virus has benefited investors that understand the fundamentals of real estate
and are willing to bet on them.
And are willing to bet on them long term. And see the advantages of actually holding property, building wealth, you know, wealth creation, all that stuff. Because if you're the type of person that continues to sit on the sideline and you're not leveraging the
changing world,
and the scalability that this virus is creating for the real estate market, you're losing a lot of money right now.
Behind.
You are losing a lot of money. Yeah.
Right now,
it's just going
to future.
It's just going to continue to get tougher.
Yeah,
that's what I think. I don't think this is going to slow down, not anytime soon. And I was wrong. I was legitimately wrong. I was wrong before the virus, and then I was wrong after the virus. Because I remember talking to you and being like, you know, a couple months after the virus started popping, I was like, oh, the fucking real estate market is going to take a hit for sure.
Here's the thing: you were wrong about how you thought it would play out, but you still kept buying real estate.
Yeah,
you never stopped.
No,
because you bought on fundamentals.
I bought the most real estate I ever have during the pandemic. Like hands down, I bought like, I don't even know how much, $15 million in real estate.
So it almost doesn't even matter if you're wrong.
Yeah.
In real estate, as long as you buy cash flowing real estate, and you know, whatever. It's not about timing the market, anyways. It's just the property makes money. I'm going to buy it.
Yeah, that's it. I know it'll cover me. Yeah. I know it'll continue to cover, and I'm not going to sit on the sidelines and lose an opportunity based off of it. I'm willing to bet on. I'm willing to bet on the fundamentals long term.
If you have money sitting in the bank right now with these interest rates, you're getting burned daily. And always, you should never have money sitting in the bank.
You're not even getting burned. You're fucking stupid. Like straight up. Like you're stupid. If you have, I don't even care. Like if you have money sitting in the bank right now, you're fucking stupid. And even if you have money like sitting in your house in equity, you're fucking stupid too. And here's the thing. Here's the thing. Maybe you're not, okay, maybe that's a little harsh, but I don't even care. Like if it is what it is. Like if you're the type of person where you don't want to make money and you have money sitting in the bank or an equity sitting in your principal residence, then that's fine. That's fine. I accept that.
Your life.
Yeah. If you don't care to make money, then that's different. But if you like really want to make money and you have money sitting in the bank and or in your house as equity, you're fucking stupid. Like you're fucking stupid.
The first thing I do when I have X amount of money,
get your fucking heads out of your ass.
The first thing I do when I have money available to deploy, I go look for an opportunity and I find one. You will find one. You will find something that makes money in real estate if you go look for it.
Yeah.
The problem is most people, I don't know, maybe they just don't.
They get scared.
The good investors do. Like a lot of my good clients, as soon as they have money, I'm going to buy real estate. Let's go. And we go look and we find an opportunity. It might take a month. It might take 6. Eventually we get something that makes money in a good location. But if you're sitting on cash, you'll probably always be sitting on cash because you're just
losing.
Afraid.
Yeah, you're losing.
Probably.
Yeah, and you can't. Yeah. Right now it's free money, so you guys got to take advantage of it.
If not
it's
now,
literally free money. Like anything below 5% is fucking free. You can get higher than 5% and fucking doing anything.
Yeah, and we're at 1.5%.
Yeah,
dropping.
so it's insane.
It actually seems to be dropping
for sure. So you have to take advantage of the scalability. Like so, for me, the benefit. We'll sum it up like this.
One more point though, real quick.
Go.
Another thing that the virus did was it dropped interest rates.
It did significantly, but also it's a factor of Okay, sure, yeah, that's another good point too. What with the banking, how did this affect mortgages? Is the virus dramatically dropped mortgage rates. Now that's also a proponent of higher values on real estate.
Oh, massive.
So it's
probably the number one.
It really is probly. So fuck, we didn't even touch on that earlier, but this is like by far probably the biggest point. Whatever. So that's obviously a huge proponent of how the virus is accelerating real estate values. But you have this thing, right? So if it wasn't for low interest rates, like very low, prices probably wouldn't be so high, right?
Agreed.
So you can argue like even though interest rates are so low, right? If they weren't so low, we wouldn't have the same kind of.
It would be the same thing, but just the numbers would be different. Like
exactly.
The payments would be higher.
Exactly. So
the returns would be the same. But what people didn't understand is when those interest rates dropped, you better start buying real estate because the money's going to flood into it. And the same is holding true now. Again, in my opinion, I think rates are more likely to go lower. Now here's the catch here too. This is what I would say. Historically speaking, property will not come down based off of when real estate mortgage rates start to increase. Interesting.
Correct?
I don't know actually about.
I'm pretty sure.
Okay.
Correct me if I'm wrong. Somebody correct me if I'm wrong.
Off the top of my head, I think you're right.
I think I'm right. So that means that as long as real estate rate, or as long as mortgage rates are that low, you're paying down a lot more equity.
Oh, big time.
Okay. So simply based off of that fact, you are creating a lot more wealth. You're accelerating your wealth because even as interest rates creep up, you don't really see values from when they were like really low in an instance like this you don't see value starting to like come down. Like we won't see in 10 years, if the interest rates are at say like 8%, you won't see housing at like 3.
I agree.
You get what I'm trying to say?
Yep.
You won't see that disparity. It'll continue to increase even with, it might not increase as fast.
It'll decelerate.
The rates right now are so low, helping the real estate to increase dramatically. So we'll see a slowdown in the value increasing as the rates go up. But I don't think we'll see the rates come down. Yeah, for the foreseeable future, they're low forever.
It could be forever.
Not forever, but like I don't think they're forever. But
it could be.
Maybe
we don't know.
Maybe in our lifetime.
Yeah.
I don't know. But this is unprecedented, right? So we don't really know. But I don't think they're going to stay at fucking 1%.
There's negative interest rates in the world. People need to understand this. It is possible that this is the new normal.
But they come out of it quick. I think like usually. So what's happened in the world when they hit negative interest rates, I'm pretty sure they come out of that decently quick.
I've heard the opposite where you get buried and they can't come out of it. So I don't know. I haven't really looked into it. We should do a whole topic on that.
Yeah, maybe Jesse throw something up on the screen there.
But another thing, people don't understand this. You're hammering down your mortgage right now at those 1% interest rates. Like I looked at a mortgage calculator the other day. I'm like, how how am I only paying $400 in interest on this mortgage payment? Like I thought it'd be way higher. I'm like, oh yeah, rates are 1.4%. That's why.
Yeah.
So my interest payments are lower. My principal payments are higher. That's huge, man. People
is.
People are not
people are creating wealth like at an extreme pace. So
big time.
So at the end of the day, you know,
changed the world.
It really did. It accelerated wealth. So what a lot of people don't understand is for people that haven't owned real estate prior to and from the beginning of what happened here in 2020 is people's wealth have been it's been accelerated.
Rich always get richer, and this is why, because no matter what policies are in place, the rich people always take advantage of them because they're positioned to do so. It's the middle class that sit on their hands always and do nothing that are getting burned right now. But the politicians come out and say, oh, we got to close the gap. We got to close the gap. But all these policies are doing the exact opposite. You
100%.
drop rates to 1.3%, investors go nuts and they get even richer than ever before. The middle class are not investors. They sit on their money. They do nothing. They get burned by inflation at an unprecedented rate. But the politicians are up there preaching, and the middle class believes the politicians. They don't believe us. So they're not going to make the moves necessary to take advantage of it. And they're going to be footing the bill probably forever.
And let's think about this for real quick right now. Printing money into an economy is inflation in itself. Yeah, it's already
it's like
So for someone that is saying like, oh well, there hasn't been like, you know, any kind of, you know, metrics that have measurable inflation yet, that because there hasn't been any reports. Like, hello, it's already happened. Inflation comes from printing money. Yeah. So by you sitting on the sidelines and doing nothing about that, you're gonna lose.
You're not going to lose. You are losing.
Yeah, you are.
Right now.
Yeah, sure.
And you've been losing for a year.
For sure.
Straight up.
So all in all, the virus has accelerated wealth, accelerated real estate values, which I was wrong about, tanked real estate or tanked mortgage rates, which just is creating a frenzy, accelerating real estate values even more.
Mm-hmm. These could be permanent changes by real estate.
We'll find out.
Love it.
Done.